Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM linking you to the global market to access various financial assets. Now, today being on the 9th day of the 4th month of 2025, we are experiencing the aftermath of Trump's tariff Ariel on in the year, that is in January. I remember we said that we will possibly see a shift from monetary policy to fiscal policy, that is from actions being taken by the central banks slightly shifting to government decision making to move the financial markets, and that has been taking its effect in full force. Now, today discussing reciprocal tariffs on the 5th of April this month, we had the United States administration led by Donald J. Trump impose tariffs. Now, what are tariffs? We have said tariffs are taxes imposed on imports, and the reason why countries tax other countries when doing business with them, of course, is for government revenue, and they attempt to do this with a much more good approach. Good to mean to favor one country in comparison to the other, and now US feels it has not been favored in trading with other countries, so it is reviewing the taxes on these particular imports. Now, the title of the program was called reciprocal tariffs, and we see now the board before you explaining how this is done. But before we dive right into this, it is important to remind you that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free time on our YouTube channel at HFM Kenya. Kindly remember to like, subscribe, click on the notification button, and share to improve on our algorithms. And it is our commitment to you that we will keep on improving on content that we post from time to time to fill the gaps in the financial markets in context of education. Now, back to this. These reciprocal tariffs are to review the position of the United States in comparison to the trade partners. It is good to note, number one, there is a 10% blanket tariff, to mean as long as you're in business with the United States, you pay 10%. Secondly, different countries have different tax increased or reciprocated, reviewed, if you may like. China being at the top of this list because China is considered trade partner of the United States, but at the same time a competitor of the United States in influencing the global markets and the global trade sphere, in short, the global economics. Now, China was reviewed at 34%. We see the European Union who taxes the United States 39%, was reviewed to 20. China taxes the United States 67%. That's quite huge. It was reviewed to 34%. We see Vietnam 90%, quite huge, perhaps because of the military equipment that they specialize in building, and nuclear related programs also. And US reviewed that to 46%. Now, you might want to take a screenshot because we might not have time to go through all of them, right? And what is the effect of this on the financial markets? Let's go and demonstrate that on the charts. Let's begin with stocks, US stocks. This is US 30, 30 companies in the United States being put in one basket. These companies have got the trait of being impactful in context to these particular indices, which is an asset classification. We see that it has been in a bearish trajectory as investors consider shifting their investment to something much more safe, something much more stable, and stocks and group of stocks at this time is considered not very particular stable. In regards to this asset, which you're going to see is also the scenario on US 500. You see it's also bearish. If we go at US 100 or the Nasdaq, we'll see it's also the same. Attempting to find mine, just a minute. It's also printing the same, just found it, being bearish, showing that investors are somewhat not confident in stocks and group of stocks at this particular time because of the global uncertainties brought by the trade wars, which is brought by the key double letters TT, Trump's tariffs. In regards to US oil, we'll see it is also behaving in this particular manner, appearing to be bearish, reacting from these particular tariffs. Not only the United States based assets, but if we fly off to Europe and land in Berlin, to have a look at German 40, an index of 40 companies in Germany, we shall see it is also behaving the same, attempting to retrace amid renegotiation of these particular tariffs. It is important to remember that countries and states will react in two ways. As of yesterday, United States government officials put out message that up to 50 plus countries are complying positively. However, other countries are not complying positively. Now, this brings us to the two reactions. What will possibly happen? Number one, countries may choose to renegotiate. Number two, and if they negotiate, it is an attempt to comply. And number two, these particular countries, we may also choose to retaliate and give back or tariffs also to the United States. Now, these uncertainties is what is causing stocks and group of stocks to behave the way they are in this particular time. We will see Tesla also is bearish. If you could see, Tesla is a majorly an automobile individual stock, which is also likely to see the scenario on Apple stocks, attempting being bearish, attempting to recover, but overall being in a bearish trajectory. So we see for stocks and group of stocks, short positions for scalpers and day traders would emerge a much more risk off approach. However, to gold, gold reacted from the area of interest that we spoke about the day before yesterday, printing more bullish. This because at first, when the tariffs came out, we had mixed reaction, and overall we had a bearish attempt of gold to print to the downside. This was because the United States dollar was perceived to be strong, but that would have been the case if the tariffs could not have come the way they did, because they did not come exactly with the anxiety that the financial markets anticipated. They came out in mixed fashion. What do I mean by that? We had aggressive taxes in the name of tariffs, and also we had conservative taxes, right? Now, if these countries would react positively, it would have gold print bearish, and that was the market sentiment at that particular time. But we see some of these countries also retaliating. China, for example, China has put out a message to the United States that they will consider imposing more taxes also in the United States, and this is bringing uncertainties, causing gold to print to the upside as it may. Currencies are printing out differently. If we take a look, if we take a look at GBP USD, Euro USD, don't find mine, here it is. You see it's printing, attempting to print bullish, right? Because the United States dollar or dominance is being challenged at this time, where the dollar is weakening slightly, as we see the process of responding to this uncertainty, which is brought by the taxes, or what we are calling Trump's tariffs. In context to that, if this is your first time to interact with the financial markets and you like to learn more, kindly visit you consider visiting hfm.com. Just type hfm.com at your browser, attempt to register for an account, and one of our experts will get in touch with you to help you through the process. And remember to observe risk management. As a disclaimer, this is not financial advice, this is purely meant for educational purposes. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Thank you and God bless.